What's the difference between an option trader and a stock trader? Stock trader has a high risk reward ratio. It's basically 1-to-1. Option traders, way completely subarashi, excellently different. And the point is, you can engage in reversal plays, which is something that's really hard to do with stocks. When you do it with stocks, you're going to lose a lot if you're wrong. When you do it with options, you're not going to lose a lot. But the upside is the same. So, here's what we're looking at. We're looking at something called a reversal trade. What's a reversal trade? It's when a stock falls a lot and you decide it's not going to fall so much more, so let's buy it. You buy it with stocks and it happens to be in a downward momentum, you're losing money. You buy it with options and it's in a downward momentum, you're not going to lose that much. But what happens when it reverses? It's a violent movement upward, usually. And if you're with options, you're going to make as much as you would as a stock trader, assuming you're going like long calls, right? So that's what we're looking at today. Option traders have a huge advantage over stock traders because they can engage in this type of trade without the risk of a stock trader's risk. What's a reversal trade? Well, most stock traders, the average investor, the average trader, what they're looking at is whether a stock's going to go up or down, and they're trying to get in at the time that's somewhat earlier than where the momentum takes hold. Or in the middle. In the middle, you're still making money. But an option trader, if you're going with a contrarian sort of trade, where you think it's fallen enough, it's going to bounce back up, you can take that trade with very low risk. Option traders cannot, because the momentum, if it pushes down, you're going to lose a lot. Let's say if you're going with a long call versus a long stock. The stock keeps moving down, you can lose all of that stock, potentially, theoretically. But with an option, you can't, because you have a lower limit. The debit you pay for the option is the max you can lose. So, let's take an example here. And what we're looking at is, I decided to choose this stock here, Chevron. Why? Because it gives an example of a stock, but it's also kind of like a commodity because it's an oil stock. So I want to just show you something that works for commodities, which you can trade with options via ETFs. And it's also a company, so it works as a stock. Now, I tried to do this before the market opened, but I was a little late here. The internet kind of sucks here. But the idea is, essentially, I want to show you how to make a reversal trade. And I want to show you the technical aspects, the technical signals that I find very useful in making reversal trades. Now, we've learned a lot about trading stocks and trading options. You probably traded stocks before you moved here to the options course. But the point is here that you can use an option to do a reversal trade safely, whereas stock traders cannot. Now, what is a reversal trade for someone who doesn't know? Essentially, alright, let's look at this chart. We have this area where it's going down and it bounces back up. An option trader would make a lot of money here because it bounces up. Same here. Bounces down, bounces up. You can do it the opposite way with no problem. Stock traders would have a big problem because if you short a stock, you have infinite risk. You short here, maybe it bounces up, you get a big problem. You can do it either way. It doesn't really matter. The point is, how do you find that bottom where it's going to bounce back up? How do you find that? when does that happen? I'm going to give you a few signals that work most of the time for most of the stocks. Of course, if you're really deep into trading, you're going to do back tests. That's what I do for every stock. But I want to give you some basic guidelines, some basic, let's say, criteria, technical signals that work relatively well for almost every stock, almost every ETF. So I have a list right here. It's a list of 5. It's not a complete list, but I find all of these very useful when I'm trading by myself for, let's say, weekly to monthly trades. Anything from 5 days to 1 month. These are all very useful. You're going to do something more short term. We can talk about that personally or later, but I figure most people taking this course are going to look for something that's relatively like a weekly trade or a monthly trade. So I have a few technical signals that work out very well, and they don't actually match the theories overall. So let's take a look at these signals. One is RSI, one is SMA. This is actually a candlestick signal. Williams %R is more like a oversold signal. If you know what stochastics are, this is like the inverse of a stochastic signal. And then MACD, I think most people know who've looked at technical signals. This is a momentum signal. Don't listen to the theories. That's very important in terms of trading. You need to do your own backtests, or you need to talk to someone who's done backtests, because the theories not always match the reality. And the weird thing is, it changes. It changes over volatility regimes. But for now, right now, 2019, this stuff is working very well for me. And I'm going to show you how to find this stuff. You don't have to have any sort of paid system. All you have to do is have an internet browser. And if you go to a website called stockcharts.com, you can get all of these down here. The simple moving average will be an overlay, but everything else that I've shown you is an indicator. It's all the same. It's all technical signals. So what you're doing is you're looking for specific signals that tell you there's a reversal trade. And reversal trades are great because stock traders don't like them. They like momentum trades. They like to see a stock moving up or moving down. They like to buy in, or they like to short, or they like to sell off. But option traders, we can get a very high risk, high reward play out of finding those reversals to where it bounces back when people don't expect it. So we're going to go through these 5 signals that I think are very important at the moment, and I'll probably update this course later. But for now, these are working very well. Now, at stockcharts.com, when you go into it, you're going to get a chart. And down here, you're going to get whatever the default signals, default overlays are. And every default overlay will have a parameter section. And most of them are pretty good, because these parameters come from the people who invented the signal. The only one I feel that needs to be changed is RSI. I think RSI is a very good short-term signal, but not a good mid-term or long-term signal. So the default parameter for RSI is actually 14, but I switch it to 2. I think it's a very good short-term reversal signal. So unfortunately, I was not able to make this video before the market opened, but yeah, we're still, we're going to find the RSI. It's up here. Yeah. Fortunately, the RSI is below 0.2. And by the way, everything I say today in this video works on the opposite side. So what I'm going to tell you today are technical signals that work on the long side. You see this, you buy long. You see this, you buy long. You see this, you buy long. But on the other side, you see RSI2 is above 98, you short. Price is above MSA 200, you short. You see 4 green candlesticks in a row, you short. These are technical signals that I've seen often. And for the most part, these are oversold signals, which means that people sell off too quickly and then dip buyers buy in. And eventually you see the stock reverse. So we're going to look at RSI 2 below 2 first. So here we have indicators. You just go to Stocktalk.com, choose what you want, put the parameter in, and look for it up here. So here we have RSI. And right now it's 1.72. That's below 2. In my experience, and via my back tests, this is a reversal signal. This tells me that the stock has sold off way too fast, and it's going to make a bottom. By the way, I created the basics for this video before the market opened today. So this candlestick is new, but I thought it would basically stop around here and reverse up. It has not yet, and you can test me on this because you'll probably be watching this video way after I'm looking at this chart, but I think it's going to bounce back up. But anyway, when you're looking at these signals, you're not just looking at one. You're going to want to have a few that interest you. And I'm just going to show you a few that are very useful for me. So this is what I found today. I found that this stock, CVX, it went oversold. So it should bounce back soon. But I wanted to check some other things. So I checked, is it below the yearly simple moving average? Is it below its usual price? And it's not there yet. So it's not there yet. Once it dips below there, it's a pretty safe bet to buy. You can see this if you look at the past charts. Every time it dips below there, it bounces back up. It hasn't done that yet, but the other technical signals show that it's probably to bounce back up. We're probably getting a reversal signal. It might fall lower, but we're not sure exactly where it would. Still, this stock in particular doesn't really fall much below before it bounces back up and rallies. This is a reversal trade. You're looking for a fall. If it hits below that level, it's kind of like a support level. It's going to bounce back up. But RSI 2 is more short term. This is more of a short term bounce. Whereas the SMI, that's for the year. That's more of a long term trade. So if you see it bounce down below here and you buy it, you're kind of buying it at a discount. Whereas with RSI 2, you're buying it when the selling craze has gone a little too far. Next, we're going to look at this technical signal, which is not actually a technical signal. 4 red candlesticks. Rarely does a stock sell off 4 days in a row without bouncing back. We might actually see a 5th red candlestick there. I don't think so. Statistically, I don't think so. But we might see that today. But if you want to go back and look at this chart, if people sell off 4 days in a row, that's essentially a week, right? So let's say people start selling on Monday. Friday people will buy it because they think it's been sold too much. It's going to bounce up at least a little bit. And, these days, most of the people who are trading stocks aren't people. They're programs, they're algorithms, they're quants. So after a certain point, the sell-off is enough to where it looks cheap. They're going to buy it back. I haven't looked particularly here, but I can find a 4 red candlestick pattern. This is all based on backtests, by the way, but I'm sure if you look far enough back, these are very rare. Here's one. We found one. But these are very rare. 1, 2, 3, 4 red candlesticks. Next one's white, and it does indeed bounce back. So at this point, it's probably going to bounce back. Again, this is a half stock, half commodity. And commodities work a bit differently from stocks. What I'm trying to show you is what I use to trade stocks mostly. And it might be in the commodity market, but in general, this works pretty well. The whole point here isn't that you're trying to predict the movement with high accuracy, though that's great. The point is that you're using options to play the strategy. And that means your risk is very low, while your reward is very high. Your reward is the same as a stock trader's reward, whereas your risk is nowhere near a stock trader's reward. Let's look at the fourth one. If you're familiar with what stochastics are, it's a very traditional oversold, overbought signal. Williams %R is like a stochastic signal. The only difference is the scaling. It's essentially the same. If you like stochastics, go with stochastics. You can do that. You can find it down here. Just go stochastics. Stock charts has 4 of them. Full, slow, fast. It depends on your speed of trading. I particularly prefer fast, and Williams is also based on fast. So this is what we're looking at here. Williams %R. It's an oversold, overbought signal, and here we're oversold. When this dips below 90, I think this stock is way oversold, and you can see very rarely does it dip below 90, and when it does, it bounces back very quickly. Here's the most deep Williams %R prior to today, right here. Very late in May, and look what happens. You get a reversal right there. Big reversal. If you're playing options, that is a lot of money right there. From here to here, that is a lot of money on a stock that's not very volatile. Then lastly, MACD. I think MACD is one of the most popular indicators, and generally it means momentum. So if MACD is up, the stock's momentum is up. If it's down, the stock's momentum is down. The only problem with this is it's a theory. People have not backtested it. When you backtest it, you find it's not really true. It's not true at all. Because, well, there's another issue where some people don't even treat it as a momentum indicator. They treat it as a reversal indicator. It's just a difficult issue. You can go through and you can look at all of these and how they're defined and what they mean traditionally. And of course, I've done that as well, but I don't care. The point is I don't care because I've done the back tests on them. And if, for example, if RSD says negative, MACD, if it's negative, and the stock's going to fall more, if that's the theory, okay, that's great. But I don't believe it until I backtest it. And here's my backtest. If MACD's falling, when the stock's also falling, so here's MACD right here, histogram. When it's falling, when the stock is also falling, usually the stock bounces back. It's very strange. It's completely opposite of the theory. It's opposite of the theory. But if you buy when it dips, usually you make money. It's so strange. Most traders see this and gotta get out. I have to get out because it's dipped below 0. I gotta get out. But statistically, you're gonna make money by buying at that point. So I know most people, they don't have the ability to backtest. And if you're in this course, well, you know me because I'm not a big trader. I'm not a famous dude. But you know me. You have your own theory, you have your own technical analysis, you want to get tested, send me an email. I'll test it for you. And here's something that I feel is very, very secret. If it's negative, when the stock is going down, if it turns negative, this histogram, it's going to bounce back up most of the time. So, I'm not even pointing out how to trade. This is not a trading lesson. This is a statistically, if you're going to trade that way. But we're using options. So if you're wrong, you don't lose a lot. Unlike stock traders. If you're right, you make a lot. You make more than stock traders, honestly. That's the point of this course. We can use options to leverage our capital and make a risk-reward curve, a payoff curve that benefits us in a way that does not benefit stockholders. And we can combine that with everything we know about trading, whether it be technical analysis, gap trading, candlesticks. If we combine all of this together, we're nowhere close to those people who are just buying stock or shorting stock and taking all that risk. We're going to lose sometimes, but we're not going to lose nearly as much as they lose. And we're going to win sometimes, but the thing is, we win the same amount they win. So why trade stocks? I've never understood that. When I started trading, I was the same way. I bought stocks. I thought that's the responsible thing to do. You have money now. You have money in your bank account. You got to put it somewhere. But it's high risk. You can put it in cash and you make almost nothing. You can put it in stocks and you got 50-50. You got a 50% chance of going up or down, especially now when the market crash is potentially coming. But with options, you've leveraged that risk-reward curve to where you can win. And you combine it with these technical signals, especially if you backtested it, especially if you use statistics to find that these are real signals, then you win. Option trading, it gives you a huge advantage.